I just want to quickly give a few tips for taxpayers who owe the IRS money. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Studio Kiwi Show. I hope you are doing fantastic. I'm doing marvelous. If you are doing as great as I am, go grab a cup of coffee or a tea or vodka and let's roll. Today's conversation will be very simple. I want to talk to you about the top tips. I want to give you top 10 tips for taxpayers who owe the IRS money. The thing here is when you receive a letter from the IRS, everybody's kind of shocked, right? Some people are kind of freak out. But this is not the right strategy to follow here. If you receive the letter from the IRS stating that you owe money, you want to read the letter right away. You want to open it. Don't put it somewhere and hoping that the issue will go away. The IRS, of all people, of all agencies, of all federal agencies, is the number one agency that you have to pay attention to. Whatever you receive anything from them, you have to actually open it. And chances are the letter may not be that bad. In other words, this could be a simple mistake that you can clear up quickly. The agency will only contact you if they found something that they were not able to fix themselves, because sometimes they actually find errors that they just go ahead and automatically fix. But if they can't fix it, then basically they will contact you. And remember, don't ignore it, because it will not go away if you ignore it. In addition, if you don't respond within a set period of time, you may incur more penalties and interest. So first thing is read the letter right away. Second thing is you want to contact the agency. Call them if you have questions. Right now, people are thinking that contacting the agency may not be the best way to resolve a dispute. That's true, but it's sometimes the fastest way to find out what the problem is, because the idea here is for you to know what the issue is, because letters from the IRS are often long on words and short on substance, and they actually speak in a language that very few of us understand. It's just a legalese. So if you have to guess why they came to a different conclusion than you did, you want to contact them. So pick the phone and to start the conversation. The third thing you need to know here is that you need to know your rights. Actually, we're showing you on the screen right now, and we will actually leave the link on the screen also. There is something called IRS Publication 1, and this explains pretty clearly your rights as a taxpayer. You need to know your rights as a taxpayer. You have a right to privacy, to professional and courteous service, and to pay only the amount you actually owe. And you can, if you choose to, you can choose to be represented by someone else. This can be an enrolled agent, an EA, a CPA, a certified public accountant. It could be a tax attorney, or you can even self-represent. So if you have, let's say, sort of pending tax problems, you can get help from the Taxpayer Advocate Service, the TAS. And if your collection case continues and you happen to disagree with the outcome or with how you have been treated, you can actually ask the appeals office or a court to review your case. The thing I want to say here is that you need to make sure that you understand that the agency is just trying to do their job. They're not out there trying to get you or something. No, most people you deal with at the IRS are just trying to do their job, and many can be very helpful, right? So pursue that. So number one, read the letter right away. Number two, call if you have problems. Number three, you want to know your rights. Next, number four, you actually want to get to the bottom of this. You want to find out if you actually owe them money, because the IRS, there are people in the IRS and nobody's perfect. They might make mistakes, right? So the IRS does make mistakes. So if you can't figure out how the IRS arrived at a different tax amount, and it's more than a few dollars, you want to seek help from a tax professional. Again, you have a CPA or EA. So you want to actually also put the burden of proof on the IRS. They have to prove to you why they're contacting you. All right, it's very important. One thing, and number five, if you owe money, you got to decide right now if you can and should pay it off immediately. The thing here is that if you don't pay the IRS and they have determined that you owe, and you're not paying right away, there are some financial consequences, right? There are some penalties, and you have interest accruing on a daily basis. For example, let's say the IRS says you owe $1,000. That's about how much you have in your checking account, and you're rented to, or the children has to go to, the children have to, you got to pay the kids, I don't know, whatever extracurricular activities. So you can't pay the IRS right now, right? So paying the IRS is kind of important, but it's not as important in the short term as food, things like food, shelter, and other necessities of life. So you got to make a decision here as to what really matters. One thing that's very important here is that never shortchange your other financial priorities. So the IRS is not going anywhere. So you want to sit down, you want to actually plan, you want to make a household budget, you want to figure out how to make some quick cash, how to maybe generate some passive income, how to make ends meet, but never panic. Don't be late on the rent. Don't try to shortchange on groceries. You want your family to be comfortable. At least you want to offer your family some kind of decent standards of living. In terms of the IRS, again, they're not going anywhere. But once you have peace of mind, once you have the ability to think clearly, solutions will come. Speaking about solutions, number 6, if you cannot pay at the moment, you need to consider your options. The IRS is it's a bureaucracy. We know that. But again, there are people there. They understand that a lot of stuff happens in life, and they will work with you. So if you have a certain amount of time to respond and pay according to the letter you receive, you need to start thinking right now. If you cannot run up the money by then, determine how much you can pay right away. Again, they will understand. You generally can set up installment payments with the IRS for the remainder. So let's say if you owe $1,000 and you decide to actually pay $200 now, you can work out a payment plan with the IRS over the $800, the remaining. So, but if you owe a huge amount of money, you may have to consider making something called an OIC, offer in compromise. So, the one thing you have to understand is that whatever course of action you decide to take, you want to minimize penalties and interest. Very important, because large tax bills are worse if you have to pay penalties and interest on top of the original amount owed. And the cool thing here is that you can actually minimize those extra charges in 3 ways. There are only 3 ways. Number 1, exceptions to underpayment of tax penalties. So if you underpaid your taxes this year but owed considerably less last year, you generally don't pay a penalty for underpayment of tax if you withheld at least as much as you owed last year. That, of course, is only true if you pay by the due date this year, right? And the cool thing here is that if you use a tax software, you can determine if the safe harbor rule reduces your penalties and interest. That's number 1. So exceptions to underpayment of tax penalties. Number 2, you want to ask for an abatement of penalties. An abatement. To abate means to reduce, okay? So the IRS often reduces or removes penalties and interest on the penalties if a taxpayer writes a letter explaining the situation. So you can just write a letter, a very clear letter with proper grammar, of course, and you can explain what really happened. So let's say if you had an unusual tax event, you made an honest mistake, or you or your spouse had a serious illness, the IRS may waive the penalties. So you want to be sure to ask for an abatement, ABATEMENT, in your letter. The third thing you need to do, the third move you got to make quickly here, is to pay as quickly as possible. So if you owe tax that may be subject to penalties and interest, don't wait until the filing deadline to file your return. You want to send an estimated tax payment, or you want to file early and pay as much tax as you can. This is very important, folks, because even if you choose to file an extension, any taxes owed are still due on the filing deadline. So therefore, if you don't pay by April 17th, you are subject to those extra penalties and fees. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Student Kiwi Show. We are having a conversation today about the top 10 tips for taxpayers who owe the IRS money. I've already given you, actually, I think 6 tips, right? So you want to read the letter right away. You want to call if you have questions. You want to know your rights. Find out if you actually owe the money. If you owe the money, you have to decide if you can and should pay at the moment. And if you can't pay at the moment, you need to consider your options. Now let's move on. If you can't pay so speaking about not being able to pay your taxes, if you can't pay your taxes, don't avoid the bill. You need to file Form 9465. It's called Installment Agreement Request to set up installment payments with the IRS. So you can complete the installment agreement online too. Again, the form is 9465. So completing the form online can reduce your installment payment user fee, which is the fee the IRS charges to set up a payment plan. So the IRS must allow you to make payments on your overdue taxes if you owe $10,000 or less, or you prove you cannot pay the amount you owe now, or you can pay off the tax in 3 years or less. And besides, you must agree, this is kind of critical too, you must agree to comply with the tax laws. So you also cannot have had an installment agreement with the IRS in the past 5 years. So you can make payments through a direct debit to your bank account, check or money order, credit card, debit card, or one of the other accepted payment methods. So if you want to be charged a lower fee, you may want to set up an online payment agreement and or agree to make your payments by direct debit. And I was speaking earlier about the OIC, so the offer and compromise. Basically, the thing here is that the IRS will negotiate back taxes through an OIC. So an OIC is a lot like bankruptcy, and you should only use it as an extreme last resort. Very important. And speaking about what to do, I also want to touch on what you should never do. Please never do this. Say no to credit cards. I'll just delve a little deeper into that later on, but say no to credit cards. Don't take money out of your retirement account to pay a tax bill. Never do that. Because if you withdraw money from a retirement account, you may end up owing a penalty in addition to income taxes on that amount. So by the time you pay the penalty and income tax, you will not have as much left to pay your previous tax bill as you thought. Besides, please, folks, I want you to listen. Retirement accounts are for retirement. And one thing you should never do is panic. Because if you play by the rules, stay in touch, and are sort of scrupulously honest, the IRS can be a fairly reasonable creditor. Speaking about credit, number 7, if you owe the IRS money, do not pay someone else's IRS bill. Never. Business partners and ex-spouses have a way of sticking other taxpayers with the bill, right? The cool thing here is that the IRS generally holds all signers of a return responsible jointly and severally for the entire amount due. Very important. Let me repeat that. So the IRS generally holds all signers of a return responsible jointly and severally for the entire amount due. However, you may be able to avoid liability in some cases. So, and let's say, for example, that you found out that your ex was involved in shady financial deals that you didn't know about and didn't profit from. You may qualify to file for something called innocent spouse relief. So by requesting innocent spouse relief, you can be relieved of responsibility for paying tax, interest, and penalties, especially if your spouse or say your former spouse improperly reported items or omitted items on your tax return. So the cool thing here is that generally the tax, interest, and penalties that qualify for relief can only be collected from your spouse or former spouse. Nonetheless, and I want you to pay attention to this too. You are jointly and individually responsible for any tax return and tax debt down the road. What I'm trying to say here is that if any interest, penalties, or tax debt do not qualify for relief, you are responsible individually. The IRS can collect those amounts from either you or your spouse or former spouse. Remember that the whole thing about ISR, the innocent spouse relief, this only applies to individual income or interest and penalties that do not qualify for relief. Very important. Okay. Now, to actually qualify for innocent spouse relief, there are some stringent conditions. You must meet all of the following conditions if you want to qualify. So you filed a joint return which has an understatement of tax due to erroneous items. You established that at the time you signed the joint return, you did not know and had no reason to know that there was an understatement of tax. Taking into account all the facts and circumstances, it would be unfair to hold you liable for the understatement of tax. You and your spouse or a former spouse have not transferred property to one another as part of a fraudulent scheme. So, what is a fraudulent scheme? This includes a scheme to defraud the IRS or another third party, such as a creditor, ex-spouse, or business partner. And one thing I also want to say, and this is kind of an important too, and we're going to close very soon. Do not put your tax bill on a high interest credit card. I sort of mentioned it early. Now I want to dig a little deeper because I want you to think about it here. This is just simple logic. On one end, the IRS charges interest and penalties, right? Everybody knows that that's true. However, the interest they charge is nothing compared to high interest credit cards. You'll also pay a convenience fee for putting the bill on your card, for putting the IRS bill on your card. Now, as I said earlier, the IRS is a reasonable creditor as long as you keep your end of the bargain. You may be better off owing them rather than a credit card company. As we all know, the IRS by Congress statute is bound to limit the amount of interest they can collect from taxpayers. But a credit card, we've seen credit cards or loans. We've seen interest rates on credit cards or loans going all the way to 100%, right? So you can have 3 digits when it comes to interest rate or API or APR, but with the IRS, you can't have that because again they are limited. The amount they can collect is limited by Congress. So that's number 8. Number 9, I want you to document everything. I want you to keep copies of your correspondence and documentation you send to the IRS. Very important, as well as your responses from them. You want to take notes of phone conversations and the dates you had them. If the IRS agrees to anything, get it in writing. If you speak to a rep on the phone and they agree to something, please ask them to send you a letter. I haven't said email. I said writing. It has to be a letter, an official letter. And number 10, folks, this is the last but not the least. Very, 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 very important. This is quintessential. You need to get professional help because the bigger your tax problem, the more important it is for you to get qualified professional help. You want to have someone who understands the intricacies of the tax laws, somebody who understands the subtleties of the situation you're currently in, right? Enormous tax problems can mess a person's entire financial life, and the problems can work their way into other aspects of their lives too. Which is why you need to get if you have a plumbing issue in your house, if it's a small little something with a sink, a little problem with the sink, that's kind of cool. You can handle that. But if you have a large problem that sort of is that could be foundationally messy to your house, you're not doing it yourself. You're hiring a professional. Apply the same logic here. It's worth it to pay a tax professional, possibly even a tax lawyer, if the stakes are high. Because the sooner you resolve your tax problems, guess what? The better. All right, folks. This was a short convo about the what you should do if you owe the IRS money. So the top 10 tips for taxpayers who owe the IRS money. Number 1, I want you to read the letter right away. Number 2, call if you have questions. Contact the agency. Number 3, know your rights. 4, find out if you actually owe the money. Again, the IRS can make mistakes. There are people, there are human beings there, then nobody's perfect. Number 5, if you owe the money, decide if you can and should pay. Number 6, if you cannot pay at the moment, consider your options. Number 7, do not pay someone else's bill, someone else's IRS bill. Number 8, don't put your tax bill on your high interest credit card. Never do that. Number 9, you want to document everything. And number 10, get professional help. Folks, I'm out of here. Thank you so much for your conversation, for your attention to today's conversation. Really appreciate it. I will see you next time. But until then, remember, stay marvelous.